So in today's session, we will be looking at the types of deficits for UPSC examination. Alright. Now, before we go into the types, let us understand the deficit with the help of a question. Okay. So the question states that there has been a persistent deficit budget. Persistent deficit budget year on year. So which of the following actions can be taken by the government to reduce the deficit? How can the government reduce the deficit is what they are asking. Now, what is a deficit? Deficit is the shortcoming. Let's say that your salary is rupees 1000 and your expenses, this is your salary, this is your expenses. Expenses is rupees 1100. So if your salary is 1000 and expenses is 1100, how much amount you are short by? You are short by rupees 100. So this rupees 100 becomes the deficit. Now, when you have to lower the deficit, reduce the deficit, there are two ways to do it. The first way is to lower the expenditure, or the second way is to increase the salary. Either increase the salary in case of government, it's the revenue, or lower the expenditure in case of government, it's the expenditure only. So let's look at the statements. Reducing revenue expenditure, yes, if you are reducing the expenditure, we saw it will help. So this is correct. Since statement 1 is correct, this option is gone. Second, introducing new welfare scheme. Now, if you introduce a new welfare scheme, you would be required to spend more money. So this statement would be wrong. Hence, this option would be eliminated. You are left with only two options now. Let us see the statement 3. Rationalizing subsidies. What do we mean by rationalizing subsidies? Rationalizing subsidies means if you are giving too much of subsidies that is not required, it is not impacting, then you can cut it down, meaning reduce the subsidies. So rationalization is sort of reduction in the subsidies. If you reduce the subsidies, it will reduce the expenditure and help in reducing the deficit. So this is also correct. So the correct answer would be C, 1 and 3. But let us look at statement 4 as well. It says reducing import duties. No. Import duty is a revenue for the government. It is like the salary for the government. So if you reduce import duty, the salary will go down, which will not help in reducing the deficit. Hence statement 4 is wrong. Hence the correct option is 1 and 3 only. Okay. Now, before going into the different types of deficits, we need to understand a bit about budget. In budget, you have revenue, let's say receipts of the government as well as expenditure of the government, meaning the salary of the government, not the salary, we call it receipts, okay, and the expenditure. So we need to look at the government receipts, which is very important. So what are government receipts? It will be revenue receipts and capital receipts. Under revenue receipts, it will be tax, non-tax. Let me write it better because we have to further classify this. It will be tax and non-tax. Under capital, it will be debt creating. I'll explain what is debt creating, and one will be non-debt creating. And under non-tax, there is no further classification. You will have the registration fees, penalties, fines, etc., etc. Under tax, there will be direct taxes and indirect taxes. So this is the classification of the government receipts. Please keep this in mind. Now let me explain it to you, the debt creating capital receipts and non-debt creating capital receipts. So whenever a capital receipt is there, it creates a debt, then it will be debt creating. If it does not create a debt, it will be non-debt creating. What are the examples? For example, when I take a loan, the loan I take, let's say loan of 500 crores, that 500 crore is my capital receipt. But since I have taken that 500 crore as loan, I have to pay it back. So a debt, a liability, a debt is created, right? So it will be a debt creating capital receipt. So loan would be a debt creating capital receipt. Now, if I have a huge amount of land or a company and I sell it off, I will again get capital receipts. But will I have any liability? Will I have to pay back? No. So that would be non-debt creating capital receipts. That is the difference. Having understood that, now let's deep dive into the types of deficits. The very first is the most simplest one, budget deficit. It is nothing but the total expenditure minus the total revenue. Total expenditure of the government, whatever, any expenditure, revenue expenditure, plan expenditure, non-plan expenditure. Earlier this distinguishment was there, now it is not there. Meaning the total amount the government is spending minus total revenue. What is the total revenue? Total revenue is revenue receipts plus capital receipts. This is the total revenue. Total revenue equals revenue receipts plus capital receipts. So budget deficit equals total expenditure minus total revenue. They can also give you in a different form. Budget deficit equals total expenditure minus revenue receipts plus capital receipts. So don't get confused. Then comes the revenue deficit. So revenue deficit would be simple. In budget it was total expenditure, total receipts. In revenue expenditure it will revenue deficit, it will be revenue expenditure minus revenue receipts. Very straightforward. Now this needs to be understood. Effective revenue deficits. Effective revenue deficit would be the revenue deficit which you calculated from here, which was revenue expenditure minus revenue deficit. From that you subtract grants for creation of capital assets. Why? Because when there are revenue expenditure, when there is a revenue expenditure, okay, of the central government, revenue expenditure, for example, giving salaries to the employees, a revenue expenditure. In the same manner, when the central government gives, let's say, support or let's say money, aids, grants to the states, it is also a part of revenue expenditure, but some part of that revenue expenditure would be used by the states to create capital assets. That part we have to subtract, and that part is nothing but the grants for creation of capital assets. And there would be some part of which is there for grants for creation of capital assets. That is why generally the effective revenue deficit would be less than the revenue deficit. Effective revenue deficit would be less than the revenue deficit if this is greater than 0. I hope this is clear. Now comes the fiscal deficit. Now in budget deficit it was total expenditure minus total receipts. In fiscal deficit it is total expenditure. Instead of minus total receipts it is minus revenue receipts plus non-debt creating capital receipts. Non-debt creating capital receipts. You are not minusing, you are not subtracting the entire receipts, you are subtracting revenue receipts plus non-debt creating capital receipts. Meaning you are not subtracting what? You are not subtracting the debt creating one. Okay? Debt creating part is gone. So you can also write this in this manner. Fiscal deficit equals budget deficit minus debt creating capital receipts. And since there will be some or the other amount which is debt creating capital assets receipts, that is why fiscal deficit would generally be less than the budget deficit, provided this greater than 0. Okay, I hope this is clear. Now coming on to the primary deficit. When there is fiscal deficit, you keep taking loans, and year on year if you're taking loans you pay interest also. So you need to keep a track on how much amount of interest also you are paying. And if you are paying a lot of interest, it will show that your economy is not doing well. Even if it is doing well, it will show it will not doing well because there was a lot of interest of previous years. So to reduce remove its impact, we come up with a concept of primary deficit, which is fiscal deficit minus net interest liabilities, meaning the liabilities the government has on the loans that it has borrowed previously. Now, the final is the monetized deficit. Now, whenever there is a deficit, you need to address it. You can address it by taking loans, by getting money from somewhere. One way to get money is to get it from the RBI. The RBI will purchase the government security and will give the government the money. So the amount, the extent to which the RBI supports the government by providing it money for addressing the deficit issue is nothing but your monetized deficit. So your monetized deficit is the monetary support the RBI extends to the central government as part of government's borrowing program. Government would borrow from various sources. One of the source would be RBI. So the part that RBI provides is nothing but equal to the monetized deficit. I hope that's absolutely clear, guys. So these deficits are very important. Remember the nuances which I have told you. They are very important, especially for the upcoming UPSC prelims examination. Thank you.